Hey, good morning, traders. So let's see where things are at here. Markets are up a bit here. S&P's up, looks like about 3. NASDAQ a little over 17. So trying to push up through to make new highs here on the S&P. You can see on the 30-minute chart, they pushed up right there. They backed off a bit. Yesterday was, a decent day, pushing up there. We had talked about, this indecisive uncertainty that was going on here, and the pullback did hold support. Now it's pushed up, so the assumption is, based on this pattern, it should push up to new highs. The weekly chart is in an uptrend. So what's stopping it? Well, a little uncertainty, I suppose. FOMC meeting, and so we'll see what goes on there. Bonds are up, which we'll take a look at, but the trends are up here, and unless some shaking news comes out, it seems that new all-time highs are, about to happen here. Unlikely to happen in the NASDAQ after that nasty crack. And, if you were watching the leaders, or what were the leaders yesterday, first thing in the morning, they started to bounce, and, they just couldn't get out of their own way. And then they push lower and come back a little bit at the end of the day. So that institutional selling was still going on, and we'll see if it can recover from that. The weekly chart on the NASDAQ is still up. Prices are up here a little bit, but kind of whippy there. So we'll see if this can push up into this wide range bar. And let me just expand this a little bit here. All right. What I explained in part yesterday was the concept of a wide range bar. This is on a higher time frame, in this case on the daily chart, being a momentum move, or a lot of smaller bars on a smaller time frame. And this bar, big wide range bars, especially on huge volume, are a strong signal that prices are going to continue in that direction. However, wide range bars, even though they're powerful, are the weakest link in the structure of this move. Meaning, what should happen here? Well, what should happen is that prices stay in the lower half or so of this bar, ideally in the lower third, and they go sideways and they chop around, and then eventually they roll back over again to the downside and maybe test the next level. Now, if they can go sideways for a while, and this is for the moment, and it could fail at any time as it's coming into this void, what I would look for as far as failure goes is that it runs up, and the pattern I look for anyway is a retest, a little M top, and then it pushes down through. That being said, right, we'll see if it actually plays out that way, or what could happen sometimes, and it's what happened here, because if we were to go back and look at this wide range bar, you would see the same thing as this. And then prices began to recover, and they started to grind up and eventually picked up momentum into the void. Right? This is the void, meaning there's no resistance there. Now, just a little history of this concept, or the terminology of void. Where did this come from? Well, many years ago, as I studied thousands of charts and trying to figure out why do prices move as they do, and how is it possible, right, to understand and utilize the structure of a pattern that is developing that is not in alignment with the past. Meaning, to reiterate, wide range bars on volume suggest a continuation of the downside. So, once you start getting patterns such as it's happening here, this is only a 30-minute, but a downside shakeout, consolidation, absorbing the supply, beginning to build up a new support point, this momentum move to the downside and this move through time opens up this void. We can call it open air, we can call it no resistance. Let's avoid. So as it moves into the void, if this trend in this smaller time frame just continues, which you can now go with, if you want to. You can if you're an intraday trader. Doesn't seem to make much sense from the daily time frame to go with here, because it could roll back over up here. But you could go with it as an intraday trader as long as it lasts, using a trail stop, because you are into a void, and it's possible to do something like this and totally negate it. So as a general rule, the further prices retrace into this wide range bar, the greater the odds of negating its message. And of course, and once it gets up here, it's totally negated. So to varying degrees, but once it gets past that halfway mark, it's like historically that is not what happens. It stays in the bottom, it chops around, and then it rolls back to the downside. Now, usually you have multiple markets moving in the same direction. Generally, you'll have relative weakness, one versus another. But here we have the S&Ps, excuse me, knocking on the door of all-time highs. We've got the Dow at all-time highs. And we now have the transports pushing up. And not all-time highs, but showing great strength, coming back from a retest of the 200 MA. And now looks like it's going to push up to test that high. So with all of that going on right now, and let's just look at the Qs instead of the futures, it seems unlikely this would make an all-time high. But at this point in time, with the other markets showing the strength that they are, should we be betting against this intraday and shorting the Qs or the NASDAQ futures because they come up to some arbitrary, maybe moving average, or you might be looking at a Fibonacci line or a trader pivot line? In a scenario like I just explained, those reference points are more likely to fail. So it makes more sense to me, if it's going to turn down, to wait for, as I said, a double top, a price structure that supports a bearish bias that would be in alignment with this daily pattern. Okay, so let's look at the financials here, because I think we're going to have an opportunity here. They're a little extended here short term. All right, they've made this push up, and this is a powerful move, a blast off here. And, we've discussed this head and shoulders top, and I explained, that it could fail and the meaning of it, and you've got a wide range bar up here. So I want to be a buyer of this on any pullback or any kind of a continuation pattern that might happen, which could be something like that, looking for a move higher. These kind of blast off moves, some of you might have heard me talk about money bar continuation patterns. This is the type of pattern where you could get a money bar, meaning you get a blast off, an initial move, it starts to correct, and then you get a bottoming tail bar, something like that, where you're not going to get a bigger pullback. Go with it when it takes out the high of that bar. And I've mentioned Citi. There's the pattern. Citibank is the leader in the group. I've said this multiple times. It doesn't happen, right? Not in a long, long time. It's usually J.P. Morgan, which is underperforming. It's unusual. Or Goldman Sachs, clearly underperforming. Wells Fargo, underperforming. But all bottoming, and Citibank, for whatever reason, is leading. But you can see it's down here a bit this morning. So these are correcting. There's uncertainty about the Fed meeting. We'll see what they do. But if they can get a turnaround pattern here, they're, go with it. So, all right, it's kind of a long video for a morning update. Let me run. Great trading. We'll talk tomorrow.